Good afternoon, ladies and gentlemen. Thank you for joining us today for our first webinar of the new year. I hope you guys have had a well-rested holiday. Today's webinar is titled Why Customer Data is the Next Battleground for Digital Banking. And special thanks to the speakers for taking the time to share their views with us, and also Personetics for sponsoring this session as well. Now, these days, if you look at banks, they're all either fully digital or digitized to a very large extent. Providing customers digital channels to just interact with you or perform financial transaction is no longer a selling feature, but just a basic function that a lot of consumers expect, right? So these days, in order to delight and retain customers, banks need to look at better ways to harness customer data to deliver superior experience. Joining us today to share their insights and experience, right up on top there, we have Henry Nguyen. Henry Nguyen is the CEO of Timo, which is one of Vietnam's first digital banks. And below him, we have Kanags Surendran, who is the regional head for digital at CIMB, which is Malaysia's second largest bank. And below Kanags, we have Dorel Blitz, who is the VP for strategy and business development at Personetics. They specialize in self-driving finance, which I'm sure Dorel will tell us more about later. And below Dorel, we have Haymans Fung, who is the chief customer officer at Mox, one of Hong Kong's leading digital banks. Folks, welcome to the show. Thank you for joining us.
Thank
Happy
you.
to have all of you here.
Thank you.
So maybe before we start by jumping into the questions, just to congratulate two gentlemen that's on the panel today to a very auspicious start to the new year. Henry, of course, your company have raised 20 million US dollars, if I'm not mistaken. And
Yes.
Dorel, you guys have a big announcement coming up today as well, right?
Correct. Yeah. Thank you. We are about to announce later on today another major growth fundraising by one of the world's largest private equity firms, and that's really growing strong in the market today with over 80 banks in 30 markets. So this is really great. Thank you, Vincent.
Wonderful. We look forward to seeing the news later. So maybe we can start with Henry, who's right on top there. Henry, can you give us a broad sense of what are the trends that you're seeing around banks harnessing data right now? Specifically, maybe you can give us some examples on what you observe in Vietnam.
Sure. Obviously, everybody talks about big data. Everybody talks about machine learning and AI. And all these tools obviously are getting filtered into all sorts of banking services at every level. So it's everything from credit checks. For us, actually, a big part of this is also using tools to identify even patients from the very onboarding process. Obviously in Vietnam, there's a couple of companies that were sort of at the forefront of connecting with the telcos and using that as a data source. So even for us, as we onboard customers, we often have a decent picture or background on someone the moment they start to register for an account with Timo. So it's everything from customer engagement for credit scoring, other types of database analysis on our customer background and their journey in terms of their wants and needs as a banking consumer. So I could see it obviously becoming increasingly important, particularly as the marketplace gets more competitive.
For sure, and it's only going to get even more competitive as we go along, right?
Yep.
So the importance become even more apparent. Thanks for that, Henry. Let's move on to Kanags. Kanags, give us a sense of some of the broad trends in this area right now.
Okay, thanks for that, Vincent. I think this is the next battleground. I mean, there's no two questions about it. As you rightly pointed out, all that is to be done to get the basics up and running is all done. If I look at this space around retail consumer banking, and if you look at the players, there are essentially three sets of players. You have the traditional banks, you have the distribution organizations, super apps, and then you have the upcoming digital banks, which have licenses in some market and some markets yet to be announced. But you essentially have these three broad spectrum, and as you would have looked at when you look at these players, the challenge that traditional banks, at least where I come from, what we face is access to distribution, and what many of these super apps and other providers who have millions of customers with them have is that access to distribution. And the only way for these players to make banking relevant or be where where the customer is and give them what they want at the right time. It's really understand their customer base, and so data becomes your fundamental differentiating baseline. And if you don't know what to do with data, doesn't matter who you are, you're fundamentally going to be left behind. So it's because 10 years back it's about what can you do with UX and what can you do with a mobile app. Now it really is what you can do with data, and not in a bad sense, but really differentiating that in two ways, right? One is what can you understand about the customers that you have within the organization, within your user base, so that you know what to go to them with as an next best offer, a next best solution. And two, what is the value add that you can provide to your customer by giving them insights that they don't know anything about. So these are two different angles, lenses to look at. And I see, when I look at trends, that everyone trying to do a bit of both, and that's pretty much the whoever has got the best ML engines seems to get the best on the other side, which is figuring out what's the propensity model, what's the next product to sell. But the aspect around helping the customer figuring out what they need to know is still quite, we're just scratching the surface there. And that's pretty much where most of the work that needs to be done, and that's where the gap is, if you ask me.
Thank you for that. Certainly, we've seen the conversation shift from UI, UX to data, right? Of course, certainly UI and UX is very important, but these days I feel like if you don't even have that right, it's like you are not able to compete with everyone else. And really, where you stand out is how you harness the data to deliver these experiences, right? Thanks for that, Kanags. Let's move on to Dorel, who perhaps can give us a more global view based on the clients that you've worked with, right? What's your sense on how banks and financial services are harnessing customer data these days?
I think the I think the
Yeah,
question
go
is
ahead.
what exactly is the data, and from our perspective, I think from our perspective, the question is what exactly is the data, and I think that what we are seeing today is that for so many years banks didn't really were able to leverage their biggest asset, their biggest gold mine, which is their own customers' financial transactional data. And what you are actually seeing in most of the banks, they are using basically generic marketing data, but they are not really able to smartly, proactively, precisely engage with their customers about their ongoing situation or upcoming situation. And where we are coming in as Personetics, and that's actually what we are seeing aligning with the global trends, Vincent, is exactly doing that. How to leverage this amazing goldmine of customers' day-to-day financial transactional data from different multiple data sources, including open banking, including cloud accounting softwares for the small business owners, how to aggregate, normalize, provide a one holistic, deep financial view of the customers. And only for that, that's an amazing, opportunities and advantages for the banks. And then, exactly like Kanag said, how to help banks to move from a very reactive approach into finally a smart, proactive, financial data-driven approach, and to help, on one hand, to help customers, people like you and me, to better manage their financial life, to stay on top of their finance, to help customers to improve their financial wellness, well-being, and on the other side, how banks can better sell, how banks can better service. And it's not just next best action, next best offer, it's also the next best interaction, it's the next best engagement. So it's really about to stay much more close and move from a reactive to proactive approach. And by doing so, by staying much more close with the customers, we believe that's the battleground today for banks all over the world. That's exactly where they can differentiate themselves. This is where they can provide much more personalized interactions and much better products and services.
Certainly, right? Because I would prefer for my bank to, if they notice I have excess funds in my bank account, to offer me some wealth services instead of promoting me the same credit cards over and over again. So I feel like, yeah, definitely, if you're able to harness the kind of data, you can deliver the right kind of experience. Thanks for that, Dorel. Let's move on to Haymans. And Haymans, I think, looking at Hong Kong is always a little bit like looking in the future for us in Malaysia, because you guys have already launched the digital banking licenses, right? So yeah, I'd love to hear from you. What are some of the trends that you've observed around this space?
Sure. First of all, very happy to be here. Thank you for having me. In terms of the trends, I think customers nowadays want service and products that are personalized, smart, safe, fun, and with speed. I guess, especially in Hong Kong, everyone wants everything yesterday. So when we launched the bank, speed is something that we work very hard to achieve. Speed in terms of everything, in terms of the onboarding journey, in terms of approval of credit, in terms of approval of loan products. And data help us to do that and to be able to harness the right data and also to leverage on like machine learning and data analytics actually help us a lot in terms of, as I said, onboarding as well as access to credit line assignments. So this is number one area which is huge for us. And then another huge area for us is personalization. You exactly as you said, knowing our customers' behavior and their financial transactions to be able to personalize customer offer, as well as to do a more appropriate cross-sell, upsell. So that's the number two areas. I think number three areas, which is also very big, it's on customer engagement. How do we engage our customers at the right moment and with the right content? That's more on the marketing space, but that's also important because our credit card works with a lot of merchants and we have many, many different offers. And if we just like blast out the same offers to every customers on a weekly or bi-weekly basis, that's kind of boring. And that's what traditional banks do, and we don't want to do that. So slowly, we also like observe our customers, observe their spend pattern, and observe their behavior, and then to craft the right offers and to craft the right comms, setting out to our customers. So these are the three areas that we are doing, and we also see that even main banks, and I guess that's almost the trends for the customer expectations these days.
Thanks, Haymans. I really appreciate that. And I think I can kind of vouch for how Hong Kong demands speed, right? Just looking at the general population, you're walking on the street and everybody's walking 10 times faster than me, I'm sure. That's also
Yeah.
reflected in the demand for financial services as well. Thanks for sharing those examples. I think next, I would like to kind of dive into how your particular banks are using data, right? So maybe let's start with Henry, Kanags, and then some examples from Dorel's clients, and then back to Haymans. Henry, can you share with us maybe some of the examples of how Timo has harnessed data and what are some of the outcomes?
Well, I think Haymans has hit on a lot of it. It's
Mm,
the personalization piece, I think, is what's really key. All of us obviously want to create services that are very relevant and meaningful and valuable to our customers. And obviously, that means a lot of different things to a lot of different people, right? If we can build a fuller, richer picture of you through your transaction history, through all the different ways that you spend, for instance, then we can figure out what are the right messages to put in front of you in terms of, as Heyman said, you know, I love eating out in restaurants, but if you keep pushing me messages about, discounts on grocery stores, it falls on deaf ears, and in fact, it probably becomes an annoyance, right? But if you're sharing with me something that I clearly am interested in and care about, and of course the response rates there and all those things end up being very important. Being able to build the true feedback loops, that's another important aspect of putting the data to work. So, on a generic level, it's great to talk about data, and I think we all love talking about it, but trying to get the right data at the right time, look at it the right way, and then really what I'll say perform feedback tests. That's been kind of the challenge for us because there's tons of data there, but what are we actually doing that we know is very clearly through feedback and through other mechanisms of customer touch points, knowing that we're doing something relevant and meaningful for our customers, changing behavior, and of course, then as a business, obviously creating more use cases and also maximizing our revenue opportunities with certain customers.
thanks for the Henry. And I think certainly, like you said, right, a lot of us can talk about how to use data on a very high level, but certainly there are a lot of different challenges that banks face in terms of how to go about managing this kind of data. And I'd like to dive a bit into that a bit later. But maybe in the meantime, let's have Kanax on stage. and hear how CIMB harnesses data for their customers.
Yeah, thanks, Vincent. I mean, see, I think Henry, Haymans, they all spoke about this, and this is not. I think the structure of the strategy is not rocket science; it's more of the execution, really. If you really strategize and if you say what you're going to use data for, it's around two things. One is how do you create value for customers, and two is how do you create value for the bank. And I mean, I just keep going to that same things because at the end of the day, everything falls into those two buckets. Now, how do you create value for the customer is really around being there where he wants, where he want him to be, and where he wants us to be, and that's what we call as personalization, hyper personalization. It takes different facets, and the use cases differ from banks to banks and markets to markets. But essentially, for us, it's about a few areas, right? One is how do you delight the customer once he's already with you, and what do you do to make his life easier? Do we give reminders for payments? You know that he makes a payment for his credit card on this date every month, and if you know he's not done it, there is a clear case for you to send a reminder. For example, in Malaysia, so we have a daily set of rules, we have a weekly set of rules, we have these monthly rules, and then you have these annual, and then you have these ad hoc rules. One example of an annual rule that the bank has set up is we send you your tax relief reminder in Malaysia at the end of the year. So we look at all your credit card and debit card and account spends, and we send you an email which tells you that hey, you have spent so much on books, so much on medical and these things, and these are all tax deductible, and you get your stuff ready for your next tax cycle. So things like that, and those are emails that actually have shown us 35% click through on open rates and EDMs. If you're a marketer, if you get even a 5% click through rate, that's amazing. And for us to get a 35% click through rate shows that it is actually creating value and it's meaningful. So it's about identifying those touch points where you can create those values and being able to succinctly engage with customers, and that's where the execution challenge lies, and that you can only get through a continuous test and learn approach, and investing significantly in those activities. So for us, obviously there's a bunch of things that you do, which is about what's the next product to buy, next product to sell, what's the propensity for this customer to take on a credit card. Can this guy or this customer move up the scale into the wealth investment? So those are models that you have, and those are reactive and proactive sales processes. But really, it's about this predictive behavior and personalization. That's where the differentiation lies, and those are the areas that we at least are spending a lot of our time on right now.
Certainly, that's a good kind of service to provide consumers, right? Because at the end of the day, you can save some on taxes. Who would be upset on that? And I don't even remember when's the last time I opened my bank's email. So I guess 35% is a really good opening. Right? Well, thanks for that, Kanags. Let's move on to Dorel. Dorel, I mean, you've worked with so many clients, right? What are some examples of use cases you can share with us?
Yeah, I think maybe two examples. One of them is
Mm.
one of our clients in the region is a UOB, and now they also acquired some of the work of some of the local clients of Citibank, so they are even growing faster. So with UOB, we are working across the board on different segments in UOB tomorrow and UOB in Singapore and others. And as an example, just one of them, UOB is really leveraging the future or our vision of Personetics, self-driving finance. And this is really goes beyond just alerts and recommendations and basic insights. This is really take to the next level of leveraging data in the digital banking space, is where actually banks can, very similar to self-driving cars, banks will be able to become a self-driving finance and even think and act on behalf of their customers, and helping customers to even completely automatically save for the future or cut a debt or invest. And customers don't need to set up goals and threshold and time limit and all of that. And we believe that's the future. Again, the 5 steps of self-driving car maybe will be applicable to the way that we look on banks. And we really appreciate the same vision of UB taking that into the next level and able to quickly deploy all sorts of these automated, self-adjustable wellness programs. And again, the ability to understand where customers can have maybe has some excess funds in their own checking accounts, or even through open banking connected other accounts, and the ability to identify variable amounts of money, to moving them into all sorts of savings or investment, robo-advisory and trading and debt reduction, automated pockets, and the ability even to split this kind of monies into different goals if the customers had. So it's really about, again, the vision of how banks should fulfill their customers' expectations and maybe the social contract. And like you said, Vincent, you would love that your bank won't just become your real-time financial advisor, but even will take all the burden from you to the bank, to the technology, to the human being, to this hybrid model, and will just help you to to live your life and help you to move from a FOMO, fear of missing out, into JOMO, joy of missing out, where you can finally sit back and relax, and your bank will be there for you, will anticipate, think for you, act on behalf of you, and help you to live your life. So that's one example from UB. Another one across, from other region is, as an example, US Bank, one of the largest banks in the US. They also acquired another bank recently. And US Bank, they are using 6 different business solutions of Personetics. One of them is actually an automated saving programs. Now it's running around millions of clients. And again, customers don't need to do anything. Again, it's only one click, even connect external bank accounts. And our analytical models and our cash flow predictions and so on and so forth can identify different pockets of money, and every couple of days, and it can be a lot of money even, we can move that into different accounts, we can split, we can manage that, and helping customers automatically. Of course, they can always pause, they can always stop, but helping them to automatically build their own financial resilience.
For sure, right? And I think, when we think about a lot of the banks who say they're targeting millennials, and they're like, oh, the way we're targeting millennials is by going digital, is by having this great UI, UX, because it's cool, all millennials want to go digital. But what a lot of these banks, when they put this messaging out there, they don't realize that a lot of us are like in our 30s, even approaching our 40s. We're going to have children, right? And we want to start planning for our wealth. So how do banks kind of fit into that picture and use the data to provide that kind of services? So those are certainly some really good points. Thanks for that, Dorel. Let's move on to Haymans. And Haymans, I'm sure you have a lot of examples for us, being one of the leading digital banks in the Hong Kong. Why don't you walk us through some of the case studies that you have for us?
Sure. I really agree what I guess Kenneth said about, it's really the execution and the implementation that matters. Because on high level, strategic wise, we all know like what and where we want to be, but it's really the bank whether we can actually deliver. I have a case study that I can talk about. It's about credit card approval. When we before we opened the bank, we did a lot of research, and like we asked our customers what are the pain points, right? That's very basic. And one of the pain points is people find it very troublesome to need to send in documentations, income proof, address proof, and then wait for 2 days or 3 days to get the card approved, and then send the card over for another week. So it's what, 1 week or 1.5 weeks process the soonest with traditional bank. And because Hong Kong people want speed, so we really looked into how we can shorten this whole credit card approval process. And the way we did it was really with data. So just I give a little bit of technicality or some details. When it comes to use of data for credit card approval, usually for most banks, I guess, you look at your customers' credit risk rating provided by the local credit bureau. You look at your credit risk parameters as the bank's own risk appetite. Usually these two things, the combinations, and then you run all the data behind, and then you make a decision. And for us, we use these two. Plus, we also look at the data in terms of the estimated income, plus some of the usage behavior data. And because of these two extra data points, it helps us to make a better decisions. And then, of course, we have to rely on machine learning. And we did a lot of testing. It's not like we got it right away. We did a lot of testing, and also to match it with the usual like bank credit risk rating to find a level that we're comfortable. to be able to give such a decision in within 1 minute. So the end experience for now is a person with our account. They only need to press 3 buttons and wait for maximum 2 minutes. We can get the credit card application approved, and without them sending us over additional documents. And because it's a digital card, so they can choose to put the card on their Apple Wallet and they can use it right away. It still takes time to send the card over physical mail. It takes around like 3 days. But at least because of, as I said, because of the additional data points that we use and the way that we look at how we put the data together, and with the help of like AI, of course, and also the risk appetite that we take, it's a business decision, which enable us to shorten the whole process to minutes and just like a few buttons. There is a rule within the bank that whatever we want our customers to do, it has to be completed within 2 minutes and less than 5 buttons from a UX perspective. So that's one of the that's one of the and that's why we are still in Hong Kong, the fastest bank for account opening and also for credit card and loan approval.
I think certainly, one of the areas that is a good experience is also the speed in which you are able to interact with your bank, right? So being able to open accounts that quickly, I think is definitely a good experience. I mean, personally, when we talk about data, we're not even looking at very complex things, right? I've had experience where I tried to apply for a mortgage. I got my mortgage approval and I need to open a current account with the bank. I need to show up at the branch to give the same information again, right? So I think certainly if we are able to use customer data and use alternative sources of data to help with this kind of onboarding process, it would certainly be good as well. Now, we have over 200 people tuning in from YouTube, LinkedIn, Facebook, and various channels. So if anyone have any questions, feel free to comment on our YouTube link, and I'll try to direct it best I can to the rest of the speakers. It seems Henry has dropped off for a moment, so my colleagues will check in with him and see if he's able to dial back in. In the meantime, maybe we can move on to Kanags. And earlier, Henry was talking a little bit about some of the challenges that banks face, right? So of course, in your journey to be more data-driven, Kanags, I'm sure you've also encountered a few obstacles in CIMB. So maybe walk us through that journey, some of the challenges and some of the ways you've overcome these challenges within your bank.
Okay, it's an interesting question, because the challenges have not gone away; they're still around, right? So, I mean, see, are they, 10 years or 12 years back, I was in a bank and we were launching a mobile app for the first time in the market, a smartphone app. I couldn't even get $5 million US funding, because people questioned the value of smartphone banking. And you know it But then I'm sure the same people now who questioned are leading digital transformation in those organizations. So it takes time for people to appreciate and learn and figure out, especially when you have a disruptive innovation sitting in front of you, a disruptive model sitting in front of you. So the primary where I'm going with that is the few challenges that were there in the beginning was really trying to um, create a structure inside organizations where you can say spending so much money in something is actually going to create value down the line, and you don't have any baseline for you to prove that is actually going to be the case. So you are expecting a whole bunch of folks to trust your gut and trust that this is where the world is moving, and to make that step is a big ask, especially in an organization where there is always challenges around where the money, because there's enough things to invest in. How do you know this is the right thing to invest? That's the the question that needs to be answered. So the first one is trying to convince people and figuring out that actually there is value here. So you need to find clear stakeholders who are willing to take that bet and who are willing to test and learn even from a small point of view. That's number one. Number two, once you get that, is in an organization like who we are, or any traditional bank, your infrastructure and ecosystem of technology has been built over decades. So for you to get a single point of view of data is not going to be easy. It's very different when you're a startup, because you have built a data model and you're structuring your investment, and structuring your IT architecture right from day one. In an organization which has been around for dozens of years, it's going to be challenged really getting your information architecture right, information layers right, and connecting these archaic platforms, uh, across to pull this data, and being able to do that in real time, because that's where the real meat is. Obviously, first is getting it to a stage where you're able to create sense of the data and create models. Number two is being able to do that in real time. So that's the second challenge. The third challenge is really coming down to people. At the end of the day, as I said, we have super apps, we have fintechs, you have across industries, not only just banks, everybody looking for the same talent, whether it is digital, whether it's agile, whether it is DevOps, and whether it is design on data. It's the same set of folks. So you have a situation where there is a dearth of talent across all markets and across industries. So yeah, I mean, somebody's earning 20 times more every year because they just are able to move. But the point is, there is challenge with resources. So how do you solve for that in an effective manner, and able to train people so that you not only are able to move fast, but also give those folks who are with you, especially in these in the data space and digital space, a career that actually makes sense. Because especially in organizations like traditional banks, these career paths are just very nascent. So to how do you create a structure that helps them move along? So these three are, in my opinion, the biggest challenges that you faced, and I think we continue to face. Right? Back to you.
For sure, thank you for that, Kanags. And I think, on the theme of talking about asking for investment, 5 million or whatever, there's no shortage of department heads all saying that their project is the most important thing for the bank right now, right? So it's always a
Yeah.
challenge to get the kind of budget out. And of course, talent is a big thing. I like to dive into that a little bit later as well. Because these days the tech companies are borderless, right? Especially with the COVID-19, they're all like, oh, you can work in Malaysia and then serve a company that's in Dubai or US, and just the currency alone is hard for a lot of local companies or banks to compete for this kind of talents, right? So there's so many moving parts that we need to consider as well. Thanks for your views. Now that we got Henry back on, Henry, why don't you walk us through some of the challenges that you've come across, in being more data driven, how you've overcome these kind of obstacles and whatnot. You have the floor, Henry.
Sure. Like I said, the hardest part obviously is, you know, one is just getting access to the right data in more traditional banking platforms. And we obviously partnered in the beginning with a much more traditionally structured bank, was already very difficult, right? One of the big push that we made to migrate to Bamboo as our core banking platform was just the greater flexibility and the ability to kind of slice and dice all the data in the way that we needed to. And that modern kind of architecture allows you to do that in so much more simple and straightforward ways. So going back to then, never mind data accessibility is one challenge I think most institutions have. Now what do you do with it? And the hardest part still, and I have to say, we're not where I want us to be, and we're where I think we're going to need to be extremely successful, is being able to then take those data points, do the analysis, come up with the right hypothesis, and then I guess I'll call it put out the marketing experiments, right? Seeing responsivity, we're seeing how we're getting either a confirmation of our hypothesis or a complete antithesis of it. So that to me is the key in terms of making sure that you put data to work, because I think it's super exciting and sexy to be able to kind of come up with all these great charts and graphs. And some of them, quite frankly, are fascinating to look at because it gives you insight into certain type of needs and behaviors your customers have. But how do you translate that into, really important and relevant business products, right? And services that, again, ultimately increase your top and bottom line. And I think once you're able to do that, that's where the magic starts to happen. And for us, we've seen it start to happen, but if I graded us, out of 10, I think we're only probably 3 out of 10. There's so much more potential in terms of what we can do, what we should do, and quite frankly, competitively, what we're going to likely have to do. We're going to stand out from the crowd and also be more competitive than the digitalization of more traditional banks, and then, of course, newcomers into the marketplace.
It's definitely a journey, right? You got to test, validate, and experiment over and over again. And one day when you reach that elusive 10, the industry would have evolved where the 10 is no longer a 10. So constantly you got to pursue that kind of new standard, right?
Well, my colleagues knowing me, I don't think we'll ever reach 10. So,
Thanks for sharing your challenges, Henry. Let's move on to Haymans to also share her views as well. Haymans, you have the floor.
Sure. It's a very interesting question. Before I joined Mox, I worked for an insurance company. So I experienced hundreds of years organizations with lots of data, but then the different systems just don't talk to each other. There's no single source of truth, and every insurance company now is talking about transformation, and it's taking them 5-10 years transformation. And then moved to Mox, which is a startup virtual bank. We started only like 2 years ago. The whole system, everything was built from a more data-driven and customer-centric perspective. So before I came over, I thought, okay, Mox is the answer. It must be heaven in terms of like using data and getting access to data. And then I realized we have our challenges too. It's not like we're in the perfect world. In terms of people and talents, totally agree. So I'm not going to add on to except to say that, yes, we face the same challenge. I think for us on a data challenge is how do we use the data together with our partners? We have joint venture partners. Hong Kong Telecom, one of the largest telecom company in Hong Kong. It's also our investor. So, and then Trip.com is also an investor. So it's Standard Chartered Bank, Trip, and Hong Kong T. So if we go out and talk about lifestyle banking, we're supposed to have like the best. Like we have travel data. People like to travel in Hong Kong. We have telecom and mobile data and all this. Like theoretically, yes, we do sort of. But it's even for us, it's very hard because of the regulations. Because of different systems, because of course we also need to get consent from our customers, and once it gets to all these different data, it's too much data for us. It can be too much data for us too. So what's the best way to harness this data? What's the best way to put them together? What's the best way to use them? So we also have our challenge in terms of, as I said, using our partners' data, and to be honest, we haven't sorted it out yet. We're still like working on different ways. We're still doing like different testing, and same as Henry, I think we are like a 2 or 3 at this stage within our own bank. Like if I look at my own customers, I would say we of course we still have room to improve, but we're doing a lot, and it's much easier. But when it comes to integrating other partners' data, it's hard. It's still very hard for us because again, it's different machines. And then the funny thing is different industry have different regulations. So we have our own banking regulations. When it comes to telecom, they have their regulations. And C-Trip is a China-based company that have the. So it's I guess you can imagine. So it's not like it's that easy, even though we're partners. So in that sense, it's one of our biggest challenges that we're trying to solve now. Yeah.
I'm really enjoying this part of our conversation because I feel everybody is just so candid about some of the challenges, and there's a lot to learn, and I really appreciate your sharing. I'm sure you've had a bit of a whiplash jumping from insurance to a more startup kind of bank. Must be an interesting experience. Thanks for that. So
It
let's
is.
move on
It's a
to.
very interesting experience. If we have more time, maybe we can talk
For
about it
sure. I think
later.
we can do a whole
Yeah.
session about that.
Yes.
Thanks, Haymans. Let's move on to Dorel, and then maybe we can move on to some questions from the audience. Dorel, what are some of the challenges you've kind of experienced working with some of your clients?
Yeah, first of all, I do have to say, Henry and Hymans, this is really great. Really appreciate it, and I really like to, this candid approach, and really sharing your challenges. I think that's exactly what people are looking for to hear from you. So well done on that, and I really appreciate that. So thank you for sharing that. I think from our perspective, first of all, as a company, as a global growth company that is partnering with banks and digital banks, and now also insurance and others globally. I think from our perspective, it's always the ability to to access the financial data. Banks are still using all sorts of spaghetti infrastructure, and the financial transactional data, even the basic one, even the customer's last 6 months of financial transactional data, what you are already receiving, Vincent, today in your mobile app, even this kind of data source, in some cases, it's being already scattered in mainframes and data lakes, and sorry, even data swamps, and all sorts of different databases. And I think even just accessing that, even without moving, because we do not move the data, we do not duplicate, we are just accessing that, but just the access itself, it's definitely challenging. And I think I do agree with Hymans. Once we are doing all of that, and you are able to actually analyze everything in one data structure, just to gain like one holistic view of the customers, that's for itself, that's the main challenge. I think
Mm,
once you are doing that, then you can actually create the specific use cases that you want to provide to your customers. And I appreciate what Henry said about that. And I think following what Kanags said again, I think the next step, the next revolution, the next battleground for digital banking will be much more of cognitive automation, which means that
mm,
I would love my Mox, I would love my Timo, I would love my CIMB to be there for me, to take action on behalf of me. Of course, it's not relevant for all the customers, it's not relevant for all the services, but basically, I think we need to acknowledge the notion that we want our banks to be much more responsible, if you like, to our life, to our financial life, and helping us, to sit back and relax. You spoke about it, right? I have kids, I have dreams, I have needs. I want to take my kids in the summer to Disneyland, Disney World. But I don't want to plan ahead. And I don't want to think all day long. How much do I need to save? How much money to calculate things? I just want to know there is someone there, that is helping me to achieve my basic dreams, my basic life. I want a new Tesla car. So I just want a technology, a hybrid model, something that will help me to achieve my dreams, or maybe to cut my debt or invest. And that's the vision, and that's what we as Personetics are trying to do. So that's the challenge, just the first access to the data. And then, of course, we are working very closely with our partners and clients to help them to fulfill their dreams, their needs, their strategy, and also making sure that this is really on the spot towards their specific customer base.
for sure. And I think, nobody's excited about banking, right? Nobody wakes up like, oh, today I get to deal with Timo. Today I get to deal with Mox, right? At the end of the day, it's just what the bank can help you with your finances and whatnot. So I think that's really a solid point that you brought up, and all the challenges that associate to kind of reach to that level. Thanks for that, Dorel. So maybe right now we can take some questions from the audience. We can start with this question from Millen. Millen is asking about how to use customer data to, uh, you know, prevent fraud and also to minimize defaults and NPLs in lending. Kanags, would you like to take this?
Yeah, thanks. I mean, the reason why I didn't speak about that is that's the boring stuff, but you have to do it because at the end of the day, it's about risk management, and it's about the bottom line, and also about protecting customers. So, I mean, see, few things that I can talk about is uh, when it comes to credit, there is propensity models that are built inside the organization which look at your behavior, and they're able to identify how close you are to potentially probably defaulting or getting into some kind of a trouble. And those flags get pointed out, and then obviously the bankers will have those right conversations with the customer to help you move away from getting into that cycle, because that's what this is all about. So that's obviously a model that exists, and on top of it, uh, we have been experimenting with alternate credit debt modeling, using information that we already have about you when you're not a credit customer yet, which is we have your debit data, we have your transaction data on online and mobile banking, we have your purchase information using obviously the cards and clicks, and we know based on that we create a model which tells us how good you could be to get a credit card or a loan. And we have been able to use that to reach out to more customers and issue credit, and that's underserved market because they are not in the credit in the credit bureau, so there is no way somebody is going to be able to issue credit to those folks. But by bringing these underserved or underbanked folks into the loan ecosystem, you're actually increasing the creditable market in some way. So that's another example that I can talk about. Specifically on fraud, using behavioral insights to determine if you're getting defrauded, or if you're getting on a call where you're creating a new payee in the system to whom you are going to be sending $1,000 to. Those are simple rules that exist in the platform or in the system that automatically captures, and we're able to limit losses for our customers by proactively blocking these transactions. And these are multiple rules and validations that have been put in the system through years and years of understanding what and how these transactions work. But more importantly, there's also something that has been done, which is we have created a propensity to be frauded model, where we know based on your behavior how likely that you could be falling prey to an SMS phishing. And we have created that model, which is again a machine learning model. Let you test and learn and see how good these models are. And we use that model to, in fact, identify and strengthen our fraud prevention quite a bit. And it's just scratching the surface, right? And there is a lot more to be done, but these are good starting points for us to figure out how much more we can do to be more meaningful. I don't know if that answers your question,
Propensity
Thomas.
propensity to be frauded sounds important, but also really depressing as well.
No, but that's reality, right? I mean,
That's
if
reality
you,
for sure.
right, and it's I mean, it's, at the end of the day, it's all about your behavioral patterns, and we
For
know
sure.
by based on certain behavior that this is
Mm.
potentially possible, and that's where things can step in and say, okay, can we get a little more stricter with access for this particular ID, and then try to control fraud.
I think a certain Singaporean bank would have benefited from having this in light of recent cases. Thanks for sharing that, Kanags. So maybe on the flip side a little bit, right? So we've been talking a lot about the upsides and the benefit of harnessing data and how it can help with customers and the bank business, right? On the flip side, we live in a world where privacy concerns are growing, right? And consumers are increasingly being creeped out about how much big tech knows about us sometimes. And I wonder, for banks as well, do we reach a point of personalization where it becomes creepy for the customer, right? So how do we kind of walk that fine line of being the customer's kind of partner in their financial journey, and not kind of creeping them out with all these kind of things? So open that question to the floor. Whoever would like to take this question can unmute their mic, and then I'll bring them up on stage. Haymans, yes, go ahead.
Yeah, it's an interesting question because I think about it myself all the time because I hate it when shouldn't name other brands, not banks, but I hate it when some brands like just keep giving me email just because I've done one transaction with them. So I think about that a lot. I think there are a few things. First of all, I don't think we reached that point yet. In terms of providing personalization, servicing comms and product and offers, we still have a long way to go to be appropriate because we're only number two and we're only like 2 and 3 out of 10. I agree with Henry. So there are lots that we can do. But in terms of not being overdoing it or hyper personalization, I think we really need to test it. The way that we're doing now in the bank is we come up with hypotheses, and then we identify a smaller group of among all the customers, and then we test and see the response. And then we'll refine on it, and then we'll test it to a bigger group, and then we test again, to understand the limit, or to understand the sense from customers. A lot of time I'm also cautious. I guess it's because I'm not originally from banking, as I said. So I realized a lot of bankers have some really deep-rooted ideas about how banks should be run and what customers want and need. And so we need to really test it out. So that's one thing that I think it's important. And then another thing, it's we need to keep up with regulations, requirements, and regulations. The regulators do have a lot of clear guideline. We need to be very careful that we're complying to that, and also we get the trust from customers. I think financial industries is one of the top industries that do not have the trust from customers. People just don't like us. People just think we are like scammers or anything. So I think that's important to also look at protecting your brand and being able to build the trust in the things that you do. Or in terms of on the trust front, I'm always more conservative. I'm always more protective of, let's make sure we're not hurting our trust with our customers. I would rather get more consent than less. Well, at least that's how, because it's a very new topic, and it's very important. I'm sure in the next 5 years that would be like the core topic. But for now, I guess we're all just learning. Yeah, I just want to share.
So it's consensual personalization then. Well, thanks for that, Haymans. Before we move on to taking one more question from the audience, would anyone else from the panel like to chime into this subject? Yes, Henry,
Sure.
go ahead.
Yeah. No, I mean, Haymans is spot on. Look, it's really important to be as relevant and as useful to your customers as possible. You know, we often, we joked at the top of the panel about how, in many ways, banking services have heretofore, as long as you're, not getting in someone's way of doing something, then, people have grown satisfied with what to expect of a bank. But this is where, again, we have to be able to apply technology that then, of course, makes use of data, and because there's so many points and sources of data we can use to figure out how to best serve our customers, and that's the ultimate aim. You know, relevancy is that fine line in terms of maybe I'll use another example I had before. I enjoy a good cocktail, and maybe if the bank figures out that I spend a lot at all these great cocktail bars, all of a sudden starts pushing cocktails on me, that's probably going too far. But if you applied that same sort of feedback loop or behavior model for something else, like concerts or things like that, I would generally be satisfied, right? So it's not just the science of data that you can put to use. You still have to have real people, your marketing team in there, really thinking about how to build these correct, what I'll call feedback loops, right? Because you still need judgment. These tools are extremely powerful. They can obviously open a whole new world of opportunity when it comes to serving customers better. But the art part of marketing, of creating products, and this is, oftentimes there's the banking definition of products, but the tech version of product really comes at it more from a UI UX perspective, and getting that customer experience right in terms of product. And of course, our main touch points in a lot of the particularly neobanks is the app itself, but even how the app integrates with other channels of communication is really key, because there's nothing worse than disjointed messaging where the app is doing great, but the email campaign, or maybe you're using some of the messaging platforms, seems dissonant with what you're getting through the app, right? So the challenges of making, again, this totally holistic view of a customer, getting the art right in terms of what to really present and what the data, taking what the data is telling you to do versus the final idea of implementation, I think is still critical. So this is not just about reliance on technology and data and what it can offer. It's, you still have to have a really spot on good product and marketing team to do this right.
I think you described it quite well, right? It's also an art as well. But I challenge the notion that if a bank recommends me more cocktail places, I'd be uncomfortable. I'd be really grateful. I don't know. Well, thanks for your views, Henry. Kanags, you've unmuted your mic. Do you want to add
Yeah,
something
no,
before
I
we
no.
move on?
What
Or okay,
I just want to build on
okay,
what
go ahead.
Henry and Haymans have mentioned, right? And I think
Mm.
the only couple of points I want to say is there's a very thin line between creating a flywheel effect and moving into a law of diminishing returns, especially when it comes to communications. And Henry was spot on with the channels. You can't have a disjointed experience when it comes to personalized experience. You can't say, I'll only do this across my online and mobile channels, but then spam the customer on your emails or on SMS. It completely misses the boat. So, going back to Kotler's 4 Ps, you need to know what is your positioning, what is the place, and your proposition, as well as what time you're going to meet the customer. You can't send him an SMS at 12 in the midnight. Even your system is probably the least busy at that point of time, right? So you got to. There is an art to this. I absolutely agree with Henry on that. And it's the only way you can really mature is by testing and learning on a continuous basis. But once you test and learn after three tries, you would have learned, and you would have figured out a model that is going to be continuously evolving and is ready to run. And that works. So yeah.
12 o'clock may be arguably the best time to send cocktail recommendations, but then again, that's another topic for another day. Thanks for that. Unfortunately, we've kind of run out of time. I'm not sure if we can take any more questions for the audience. I do apologize for that. We got carried away with the discussions. It's been a very good one. Maybe let's do some closing thoughts from each speaker, and then we will wrap up the session. Maybe we can start with Dorel, Henry, Haymans, and then Kanags. Dorel, go ahead. What
Yeah,
is your final thoughts for us?
yeah, definitely. Thank you. Just I would add maybe another P to Kanags, and I think it's to be precise and to be proactive. But I definitely appreciate what you said, and I think that's from our perspective, from Personetics, and the way that we partner with banks all over the world is exactly around these kind of challenges and helping them to really again to leverage this data but also to become much more relevant and much more impactful, and really to think about what makes sense and what's not. And because of that, you need a lot of analytical models, and you need the tools to manage that by yourself, and to give the product people, the digital people, the ability to do that in a codeless manner. So I really appreciate that. But also, I'm very excited about the future, and I think digital banks like Timo and Mox, and definitely CIMB leadership throughout the region. These are the ones that will drive the innovation forward. We'll think about much better ways to engage with customers, look for their financial well-being, which is becoming really important today. Leverage additional data sets, look on open banking, open finance. I think Haymans spoke about travel data, which is really interesting, and some others data, and really try to provide a much detailed, proactive, precise, value to their clients. And I think that's the relation, that's the engagement that we are looking forward today. How to drive the highest level of not just satisfaction of engagement, also how to help customers to, as I said, move back and relax and don't think about their bank, like you said, Vincent. It's almost an invisible bank, if you will. And on the other side, I think banks are a business, so they need to better sell, they need to better service their customers, and I think that's also something that is important, how to provide the most personalized, relevant engagement and the most relevant context of providing a specific service or product. So these are my thoughts. Thank you.
Thank you, Dorel. Appreciate it. Let's move on to Henry for his closing thoughts. Henry, what are your closing thoughts for us?
Sure. I mean, Dorel's totally spot on. I think in the end, there is a sea change that's occurring in the financial services industry, and thankfully, technology has been a catalyst to this. Um, Bill Gates, I think all of us very famously quote him back in the 90s, has said, people need banking services. They don't need banks. And part of that was it was just generally a unsatisfying experience. If you go all the way back in time, I can remember my parents rushing to the bank on a Friday, when I was a kid to try to make the 4 p.m. Like banks closed at 4 p.m., not even 5 p.m. rush because if they didn't have enough spending cash for the weekend, right? And so, you know, banks in that old school regulatory mindset have had customers bend to their rules. And I think there's a new set of rules now that have been brought about by technology. And I think from a customer's perspective, it's going to be wonderful, right? Because it's going to be really become more easy, more relevant, much lower cost, and just being able to just follow a customer's personal financial life journey better is just going to be an infinite improvement on what's happening now, right? To understand that someone gets their first job or saving for a vehicle or a home or first apartment or something, and being able to come right at those moments with the appropriate type of services and credit. I know ideally we all talk about that and wanting to make that happen, but being able to get to the data, as Durrell said sometimes, figure out what it's saying, put it into use, and then finally getting it out, to the customer and seeing what's working and not working, and constantly improve that. That's the exciting future in front of all of us. So
Thanks for that, Henry. Some really good points brought up over there. Let's move on to Haymans. Haymans, what are your final thoughts for us for today?
Yeah, totally agree with what Henry and Dorel said. I just want to add on two things. Number one, it's really a combination of art and science. So it's how we strike the right balance to provide the elegant, the relevant, the interesting, the engaging experience, but then at the same time scientifically use the right data to help us to make the right decision. So it's a combination of art and science. The number two point is I think the whole banking and financial industry has always been about the financial industry. It's not about customers. So that rushing to the bank at 4 p.m. is totally funny. But then even if because we're looking into our payroll account. Have you ever thought about why is your monthly payment on that salary is paid on that certain day? Why can it not be the day that you choose instead of your employers or the bank choose? And someone who have worked in the banks forever, they told me some kind of history. Is because long, long time ago, this is a system, and now this, and then I realized, oh no, so it's all about the banks. It's not what convenient for the banks to do from operation perspective. It's not about what the customers want and what the customer choose. It's just, it's just one simple example. And I'm sure a lot of things that we're accepting now as standard will be changed because of data and technology. And so I am also very excited about the future as a customer of using financial services. But then as someone who's working in financial services, I do want to see this change because it's about time. We're almost living like in the dinosaurs age because financial services has been so big and we've been making money. And so there's not much motivation to change. But now we're forced to change and we should.
Thank you for
That's
the
it.
Haymans. Let's move on to Kanags. Last but not least, share your thoughts with us, Kanags.
Yeah, this is not the right time to go last because everybody has said everything. Um,
I
so
left the biggest challenge to you.
yes, so I mean, see, for me, I think Haymans and Henry and Dorel have all mentioned all the facts that's in play in front of us, and to me, if I look at banking, and not necessarily banks, I think banking is moving into a domain called cognitive banking, which is really around figuring out how to work at the interplay of design, technology, data, and behavioral science, and really about using all this to make sense of financial services for the customer. and that's the next decade, if you will. And I think it's going to be an interesting, challenging decade.
For sure. Thanks everybody for tuning in. I think this has been a really good discussion. A lot of very candid conversations, a lot of very good insights from all the speakers. So once again, I'd like to thank you all for taking the time to share your views with us and the audience for tuning in. This session will be available on YouTube later if you guys want to rewatch it. Thank you all for tuning in and have a nice day. Goodbye.
Thank you. Thank you.